And that's where we bring in our fuel expert, Mr. John Kingston.
John, thank you for joining us this morning. And we've got some interesting news coming out of the DOE. Of course, these oil markets these last few weeks have just been absolutely nuts. Kind of give us a rundown about what's happening first before we get into what the DOE is doing with their methodology.
Oh, okay. I thought we were going to talk about that first. So anyway, what's happening has been, continuing in the price of oil overall. But, I have the 7 a.m. story this morning for freightways.com. And what it's about is the fact that, and we've written about this before, that diesel prices continue to advance at a higher rate than crude prices. And why is that? So what I did was I looked into what's happened to refining capacity in this country and in the world. Spoke to a couple of refining experts I know, people I've known for many, many years. And they talk about really kind of two things. One is that the U.S. has lost refining capacity for years, even though we didn't build new refineries. Various additions and debottlenecking, that kind of thing, allowed U.S. refining capacity to go all the way up to almost 20 million barrels a day. That's down about 2 million barrels a day just in the last couple of years as a result of several significant refinery closures. There are a lot of varied reasons for the closures, but one of them they said is, the whole move toward the energy transition and moving away from oil is leading companies to look at these plants that need multi-million-dollar investments and wonder whether they're ever really going to recoup that investment if there's a significant move away from oil. So this is really important because this is not the kind of thing that goes away too easily. And even with these incredible refining margins, and they are just at levels that nobody has ever seen before, there's a lot of skepticism out there that there was going to be significant investment in refining capacity in the U.S., not even building a new one, forget building a new one, but in slowing the shutdown of it. Overnight, there was a story out of Japan that a relatively small refinery is going to close next year, or not next year, at the end of 2024. And the energy transition away from oil is cited as a reason. So every refinery in the world affects the whole world. It's one big market. The other part of that story is that there have been significant construction delays in other new refinery projects in other parts of the world. There are big refinery projects on the drawing boards. I shouldn't say on the drawing boards because some of them are either built or are under construction in Saudi Arabia, in Malaysia, in Oman, in Kuwait, in Nigeria. And the pandemic kind of screwed up a lot of those plans. So even as you had a lot of U.S. refining capacity exiting, you did expect to have other capacity coming on elsewhere in the world. That would have been the outlook like 3-4 years ago, and that didn't happen. So as a result, we're seeing refining margins at really tremendous levels. There's a very, very simple way of measuring refining margins. It's not complex at all, which is part of its drawback, but it's great in its simplicity, called the 3-2-1. And it tries to measure the value of 3 barrels of crude versus 2 barrels of gasoline and a barrel of diesel. And at the start of the year, the 3-2-1 was about $20 a barrel, and now it's been up towards 60. I mean, that just shows you the incredible run it's had.
So it's tripled. Is there any relief in sight? You talk about the fact that, not only should we just, forget about new capacity or refining capacity, but even just slowing the closure of those that are scheduled or going to happen through attrition, even slowing that down is not there. Is there any relief in sight to this?
I don't think so. There's a refinery in Houston run by a company called LyondellBasell, anyway. And they put it on the market. Now, it used to be in the past at a certain point, the value of a refinery that's put on the market in a weak market would fall to a point where it brings out a buyer. Eventually, there'd be a buyer. And that didn't happen this time. They had made 2 stabs at selling it, and they weren't able to sell it, and they finally threw up their hands, and they're going to close it. So that's a very different type of situation than you would have had several years ago. So they're really, I mean, if there's any relief in sight, it's that some of these refineries in other parts of the world that did get delayed by COVID will be coming on eventually. Now, they're not here, and to get their products here, you're going to have to pay freight, but that's not really the way it works. What happens is that maybe they'll displace some European consumption, and then maybe Europe can export more to us. But look, the cheapest option is always going to be if it's here, right in the US of A, and that's not going to happen here.
John, I want to get your thoughts and maybe get some myths debunked about what happens with government intervention when it comes to refining capacity. Because I think around the general public, there's a lot of this misconception that because we have a Democratic-run administration right now, that there's this absolute moratorium on adding more refining capacity, right? They immediately think that Democratic leadership means, no oil capacity coming on, no fossil fuels, et cetera, et cetera. But is that really the case? Has there been any government either support or, I guess, not support for adding more U.S. refining capacity? And if so, what has been kind of the impact of that?
Well, reportedly, President Biden has talked to refining executives about bringing on some capacity. But look, let's point out something. The last new greenfield refinery in this country was built in the 70s. Since then, we've had Republican presidents and we've had Democratic presidents. In that, it really hasn't mattered. The kind of debottlenecking and addition of units here or there has gone on under Democratic or Republican candidates. I did want to mention that, Michael, sorry, probably should have mentioned this before, that ExxonMobil does have a significant growth plan at its Beaumont, Texas refinery, 250,000 barrels a day. That's like a new refinery, quite frankly.
Yeah.
I mean, that's a big addition. So there is some hope there. But, one of the quotes was in the story was from a guy named Andy Lipow, who I've known forever. He said, if you're looking at a multi-million-dollar bill to refurbish your refinery, and all you hear is talk out of Washington about we're going to get away from oil, that's going to be a factor. I would say that over the last couple of years, that has probably surprised me more than anything. I don't think and it's not just in refining, it's in the upstream as well. I don't think that anybody really could argue against the idea that long-term investment decisions are made for several reasons. And one of the factors right now is the drive to transition away from oil. That's not just really a function of a particular party, it's worldwide, but that is having more of a factor in decision-making than I think I would have envisioned a couple of years ago.
So, John, when we're talking about adding this capacity, obviously there's the issue of building up the refineries themselves. As you mentioned, it just doesn't come on overnight, right? But a lot of that has to do with also building the supporting infrastructure to make these refineries happen as well. My dad works for a company that is a utility company in Texas. They service 6 of the major refineries in the Houston, Texas City, League City area down there. And especially with some of the problems that the Texas grid is facing right now, they have issues sometimes keeping refining capacity online just because the electricity doesn't make it down there, and there's issues with that side of the infrastructure as well. What type of involvement and collective effort do we need to see from all parts of infrastructure to support refinery growth, whether that's adding capacity at existing refineries like that one in Beaumont or building new refineries overall?
Well, it's a good question, and that's quite a background he provided there. Look, I would say that somebody like ExxonMobil with their plans in Beaumont, they're not going ahead unless they know they've got fully in place agreements with utilities and all that infrastructure. They've been to this rodeo before. They know what to do. But certainly, if you're in Texas and they had the deep freeze a couple of years ago, and if they're talking about a bad summer, I guess we hit. Texas hit an all-time record electricity consumption the other day. Yep. The grid held. We'll see if that continues over the summer. So, the government would need to get out of the way in the permitting process to try to make it a little bit more lax than they might have been. That's not necessarily it is a federal decision, but it's also a state decision too. So yes, there are multiple layers of government that need to be involved here. But right now, it seems that it's hard to look at. A specific government policy that would have led, for example, Philadelphia Energy Solutions had a gigantic refinery on the East Coast in Philadelphia. It had a big explosion, had a big fire, very spectacular a couple of years ago, and they decided not to rebuild. The cost of rebuilding was massive. And government statements about we need to move away from oil are certainly playing a factor in that. So it's hard to point to a specific government policy, but certainly an atmosphere, an anti-fossil fuel atmosphere, is as I said. I'm going to be very honest with you. It's been a bigger factor than I would have imagined.
But John, so let's look at the cause in this recent spike in oil, in the cost at the pumps. Right, we didn't lose half of our refinery in January. Right, there was a specific cause to that, and the reaction to that cause was higher fuel costs and higher oil costs. Adding capacity, to me, doesn't seem like it is actually the solution? What is the solution? I mean, you can't ask somebody to put $500 billion into a refinery because of a one-time event that caused this to happen, just in case it happens again, right? Isn't that more kind of the question?
Well, that's a good point. As again, back to Andy Lipow, he said, this is the 2 years of the golden age of refining out of the last 40. I mean, refining is one of these businesses that tends to always be miserable. It's a wonder that a single dollar ever goes into it. I mean, you do have times when refining margins are really good and you do well, and that carries you over during the tough times. But when you look at the loss of refining capacity in the U.S., again, down, almost 2 million barrels a day from what it was, there's really no time in history that we've had that kind of downturn. So where was I going with this? So, you can imagine that refining margins are going to stay higher for a while. One thing I didn't touch on in the story, because it was just kind of getting a little long anyway, was the role of IMO 2020. And Michael, if you were doing What the Truck 2 years ago, or 2+ years ago when I was on, I would have talked about IMO 2020, which was the rule to clean up marine fuels, the fuels that run night shifts.
I remember those discussions.
Long, kind of complicated story, but the best way of making a fuel for that is to take molecules out of the diesel pool that you didn't use before, and put those into marine fuels. IMO 2020 went into effect January 1st, 2020. The pandemic hit, a month or two later. And so the whole idea of IMO 2020 squeezing the diesel market didn't get a test for a long time. I think almost everybody I know of right now is telling telling us that that IMO 2020 is absolutely a factor here in why diesel has run so far ahead of the value of crude. That you are now getting diversion of those molecules that went into diesel before and are now being diverted into making marine fuels, where they didn't do that in the past. That was the prediction before 2020 started, and took a long time for it to happen because of the pandemic. But I think certainly that's the case now.
All right, John, this was really, really interesting. I think I'm going to get you connected with my dad so you guys can talk about refining capacity down in Texas as well. I think he'd enjoy that conversation. Thanks for being here this morning. Go give his story a read up on freightwaves.com if you haven't yet. Right now, we're going to head over to the wall. We've got our first carrier update of the morning with Tony Mulvey and Donnie Gilbert.